Margin level indicates the health of your trading account. It is the ratio between your equity and the margin used for your open trades. Let's look at a simple example. This trader's margin level is 200%, which means the account is still healthy. As a rule of thumb, the higher your margin level, the safer your account is. A low margin level means your account is getting closer to a stop-out.
Always monitor your equity and margin to keep your margin level healthy.
Next, we'll learn what a margin call is. Follow Britt Online Trading Academy for more Forex lessons.
Forex and CFD trading involves substantial risk. It may not be suitable for every investor. Never trade with money you cannot afford to lose.
Please like and subscribe.